Hey guys, Mike here. So, oh boy, what a hot day it was today. Oh my lord. And you would have thought after the data came out, as I told the members, red hot like it did, normally we get what? A sell-off, but the market pulled a head fake. Now I'm going to go into why that was. Also found an interview with somebody who's an expert in this. We'll explain that to you exactly why we had the head fake today and why this is happening. As well as the charts and stuff, but I'm also going to make a correction in this video of something I misspoke about pretty much all week long. I apologize about that. So I'm going to set the record straight on that. And then, of course, like I said, we'll get into the charts with Tesla and all these other mega caps. So I'm making new 52-week highs and stuff. And, of course, the IWM actually catching a bid. And so we're going to talk about that. Now, to start off, this is what I was telling members this morning with this data. PPI data came in red hot. And August retail sales, you see the sales came in 0.6 versus 0.3%. PPI year over year came in at 1.6 versus 1.2. So the same thing happened to CPI, right? For August, came in month over month 0.7%. They're expecting 0.4%. Initial jobless claims came in basically as expected. And then out of nowhere, shockingly, the European Central Bank hikes interest rates again for the 10th consecutive time. So now they have rates they hadn't seen since 1999. And so is that good for Europe? Absolutely not. But this looks like what we talked about yesterday with CPI data. It's coming down, it's coming down, it's coming down, right? But now what's happening to PPI data? All of a sudden, June 0.1, July 0.8, August 1.6. So now we need a third increase for this to be a trend. So again, the CPI and the PPI data coming out is going to be very interesting for next month. Now, what's surprising with all this, you look at November and all of a sudden they said, oh, well, with this hot data, they definitely aren't going to raise rates for sure. Now it increased to 64% of no rate hike, a decrease to 35% that they will do a rate hike, which was kind of stunning. Now, I do want to make a correction, which I talked about in the beginning here, which is, for whatever reason, it's just a stupid mistake on my part. I've been misquoting this. Friday tomorrow will be monthly OPEX, also quad witching. So you'll have trillions of dollars that will, in options that will be expiring. For whatever reason, I've been saying quarterly OPEX, which is my mistake. Quarterly OPEX will take place on the 29th, which you can see right below that. That is the last trading day where quarterly OPEX happens. And so I apologize for that. Plus, and when you look over here, these are the quad witching days. It's the third Friday of each one of these months right here. That's how you know how to mark it down. And then I said VIX expiration was yesterday or Wednesday, but it's actually next Wednesday, the 20th of September. So my apologies on that right there. Sorry if I confused anybody, but I don't know why I was looking at the videos today and realized I'm messing up my dates here and everything else. So I apologize about that. Now, for that video I told you about, the interview that will explain exactly what happened today, here it is. And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom.
Macro versus flows. Does this sound familiar?
Yeah.
It's been the story all year. Essentially, at the end of the day, the increase in interest rates, right, that we've been seeing, that's been secular, despite a couple blips along the way, paired with all of just the draining of liquidity that's coming across the market with a lag, has all been overwhelmed by something that's more important ultimately, which is vol is very well supplied, and all of the buyback, all of the rebalancing underweight in the markets, all of that combined has been a consistent push up, and we've talked about this again and again. This SEP OPEX, so important to that. Big quarterly OPEX, you have a ton of open interest, particularly on skew due to structured products. What does that mean when vol is compressed? That stock all has to be bought back. All of the stock that dealers are short has to be bought back into this period.
Okay.
Unless we realize to a sizable enough amount to the downside. We didn't get that. Yeah. It's been clear. We were clear. If you don't get in this window, time is not a bear's friend.
Yes, that's right? Something you've been saying a lot, and it seems like that's been the case. We've gotten those little steps, but never the break. We've taken a few stair steps, but we never really opened up the trap door.
And if you don't open up the trap door, the flows are coming back. Get out of the way, particularly to these big open interest, SEP OPEX, DES OPEX. There's something additional to that now, because now we're entering a strong seasonal period.
Okay.
And if you
For flows?
for
Because
flows,
generally history says September's not good for the S&P, right?
the back half of SEP,
Like if I get the almanac out,
the last 2 weeks of SEP represent this window of weakness after the SEP OPEX, right? After these flows push up, that's still there.
And so you get the gist on this. And of course, I mean, this is what I was talking about. That video I did for the members Tuesday goes into a lot more than just that, but it goes into what he proceeds to start talking about with October, November, December, Santa Claus rally, all this other stuff. So, you know, and you know, like I said, the wind is closing here. And so and likely we're going to take a big push down? No. Is there going to be some seasonality? Yeah. I mean, usually that's what happens. But again, it's all about options and flows and things like that. That's what's driving this market versus when, you know, again, they use the news for like excuses to push the market up or push the market down. So, oh, it was this, it was that. But, you know, normally we've seen it too many times where this kind of data that came out today would normally have pushed the markets down. But we're in monthly OPEX or quad witching and all this stuff. And so it's just not the case. So they're following the flows, right? And you saw that today. I mean, look at this. You got the U.S. 10 years green, the dollar's green. What does that normally mean for stocks? Usually we've seen what? The indexes go down. Instead, they were red hot today, right? And green as can be. Banks going through the roof. I'm talking about all the banks pretty much, especially the big ones. But you even had the regional banks, right, going up today, which of course helped too. The IWM, which outperformed them all today. And when you look at, you know, we'll touch these real quick. Here's the S&P for you, the SPY. And obviously we're sitting in that 450, 451 level, which has just been crucial for this one. And, you know, for a brief moment, I mean, it has held this pretty much all day once it got up to it. And it's the big one to break above, as you can see, because there's a gap up there that just definitely wants to fill. And when I look at this, I'm going to draw these trend lines here. It looks like it's kind of wedging here, trying to do a breakout. And so, you know, obviously the MAR is going to be all over the place, I think. We'll see if it's going to be green or red, but with all those options expiring. But if anything, it's going to free this market up to start moving. And so we'll see if we can break above this trend line here, which puts us around 451.75, I believe. And then when you look at the Qs, you can see this another one. Looks like it's just wedging its way up, right? It gets to the top of this trend line, which I put in here. And so we'll see if we start to head back down. Again, I can remove this gap now. So we got this gap right here filled and kind of clean the chart up some. And then this is a short-term wedge right here. But we'll see if we start to head back down. Again, we hit some resistance. Huge gap up above right there to be filled. And when we zoom out, I mean, you can see really the next level of resistance is going to be around 378.80 right there on short-term time frames. We'll see if we can continue to move up on this one. Now, IWM obviously caught a bid. It outperformed them all today. Of course, this hasn't been the most beat down as there is. Now, one thing it has absolutely been bouncing off of is the year-to-date anchor VWAP. You can see multiple times since June where this has bounced off of. And if we scroll back, you see what I'm talking about. That's where it starts on January 3rd right there. We bounced multiple times, fell through, collapsed. But again, this has been something that is triggered off of the moving averages, about 200 lines up right almost along with the same part of that. Now, when you look at what happened today on a short-term time frame, we filled this gap right here that was left earlier this week. So we can get that out the way. Left another gap below because it had such a big gap up this morning. Another big gap above it around 190. And when we go out and look at the daily here, I mean, you can see if it can get above this, as I was talking about kind of moving back up here to fill that gap, you could absolutely see it, right? That would bring us up to around 190, which put around that 50 moving average right there. And then the real question is, I mean, when you look at this again, now I remember talking about this right here where we said, oh, when you look at IWM versus the SPY, it's down around 2020 levels, and now all of a sudden we're back down around like 2003 levels. And you figure you'll catch a bid at some point in time, and can it outperform the SPY? But the key is, like I said, I think there's three things. One, the SPY has a Magnificent 7, which is carrying the market. Two, way more options flow is going into the SPY, right? Which we know absolutely pushes the SPY up and keeps it elevated versus being able to drop. And three, it has AI. You know, I mean, the IWM just doesn't have a lot of stocks that are talking about AI. And so, and I found this skit right here, which I thought was funny. And tell me if this sounds familiar and what you're hearing right now when it comes to AI and the stocks that are considered AI stocks.
Say the internet is so revolutionary that the usual rules for valuing a stock, such as revenues and earnings, no longer apply.
And obviously that was an old clip from the .com bubble, and that's what you're hearing about AI stocks, where you can't do valuations on these because they're AI stocks, and it doesn't matter anymore because they're going to do this, that, and the other. And Of course, you're seeing a lot with these AI stocks. They're plummeting right now, while, of course, there's a few that are going to go up. So the few will be rewarded. And then, mark my words, it may take a while to play out, but a lot of them would just absolutely implode. And you're starting to already see that play out, where people are realizing, wow, these things aren't going to be able to make any money for quite a long time, right? But that happens every time there's some kind of bubble pop up. That's what you hear. I'm going to save that clip, by the way. Now, when it comes to Tesla, it was actually a really good setup for Tesla this morning. I mean, obviously, you got the move up yesterday, which was pretty big for it. But we were sitting here on this trend line right here, it was rejecting, busted out of that because, again, it still has bullish flow to it and everything. And a lot of people want to see it pushed up because right above there is that gap I talked about with that main long-term trend line right there, which aligns between like 182 and 185. But you can see that volume gap right there. So if it wants to, if volume starts flowing in for these calls, which I saw happening pretty much all day slowly, and then especially around between 2 and 4, absolutely this thing's going to continue to push up. That's just the way it is. It's kind of been doing its own thing anyway, right? Even when the market's been red, there's days Tesla is green, and even when it pushes down, dip buyers are coming in. So just keep that in mind for Tesla. And then there's Google, and I'm going to rapid fire through these for you. It set a new 52-week high right here. Again, this is one of those ones that's set down there just doing nothing for a long period of time, and you've seen money kind of flow over into it, continue to push it higher. You see the RSI right there, nowhere near overbought. And you see on the weekly right here, you got probably like, I think it's around 142, 143 is that next level up right there. They can continue to push until you finally get into this resistance right here. And again, the air stent up here, right? That's where you see all-time highs over there, not overbought on the weekly as well. Then you got Netflix. It fell through that trend line, which we talked about yesterday. I know dip buyers were stepping in around 402 right there. We'll continue to see if they can hold this up or not. You can see the MACD doesn't look very hot. RSI is below right there. So momentum's not great. But then again, when you look at the hourly, what do you got? Oversold. MACD looks like it's trying to turn. So let's see if we get that short-term bounce and can push back through that trend line. Now, Shopify, pay attention to this one because, had a nice big day to it. Again, still's got that gap to fill right there. Trend line to try to get through right there, which is around like 70. And then obviously looking at the MACD, it looks like it's trying to roll over on the daily. And then when we go down the hourly, you can see it's sitting in this formation here, just wedging itself in, waiting for a move. I mean, this is going to be, I think, a big move. And it's like a 50-50 shot, really, if you think about it. If it pushes up, it's got that volume gap. It's going to push to 66 quick. Below that, you got a volume gap, which is going to fill the rest of that gap and head down to 60. So let me know what your vote is in the bottom down there. And then, of course, PayPal. A nice day for PayPal today. Again, it's kind of just inching its way up. Still got a lot of resistance. Still in this downward spiraling wedge here. But again, if it can get above like 65-ish, then of course it's going to move to 67. Right above that will be the gap from there. MACD is trying to push its way up above that 0 line. RSI is above the 50 line now. So it's kind of just slowly trickling on up. And then when it comes to Chinese stocks, you might have noticed, wow, a lot of green right here. What's going on? I wonder. Well, of course, once again, China comes out and says, okay, let's lower the bank reserves by 25 basis points and try to get more money out into the economy. So again, they're trying whatever they can to push it out. BABA had a little bit of a bounce today, not as big as some of the others. It's still just sitting there, right, on that rising trend line right there, just looking for a bounce. And I mean, if it can get some little momentum, up, and yeah, we'll go back to around 90, somewhere in there, pretty quick. It'll have resistance, and even get above that, it'll move. But right now, it's just kind of sitting there like, people just don't want to get into this because, again, there's a lot of other hot stocks you can be in, right? So we'll see if we can never really catch a bid. I thought this was kind of funny in a way, though. China growth expectations back to lockdown lows. Net percentage of FMS investors expecting stronger China economy in the next 12 months. In February 23 this year, it was 78%. Now it is at 0%. 0% are expecting a strong China economy 12 months from now. And I think that's why you're seeing their stocks just kind of in limbo right here. Because, again, they're just a hot mess economically. And they keep trying to stimulate and keep trying to stimulate. We'll see if it pays off. Again, rooting for them just because it will help the world and it will help our economy as well. Now, as far as economic data, you'll have New York Empire State Manufacturing come out. We'll see if that does anything to the market. A lot of industrial production, manufacturing production coming out. And then you're going to have the Michigan consumer expectations, sentiment. And this is going to be interesting because the markets have kind of been up, kind of been down, kind of been trading in the range. We'll see if that matters. Again, is that going to really affect the markets? I don't believe so, right? Tomorrow is quad witching, that the flow and everything, the options market. This will affect the markets more than anything else. So you might see some crazy swings. What to find out on that? Today you saw some interesting swings. The day before that, what we were doing, kind of just staying in a 0.2% range for a long amount of time. So I expect some shenanigans tomorrow. I expect at some point in time to look at market makers and say they're doing a great job of killing premiums, right? And so, because I think what happened Wednesday was you had a lot of people going short, buying puts coming into the day. They actually were correct as far as how the data was going to turn out, but that's how it works out, right? So anyway, it'll be a fun day tomorrow. I hope you guys got something out of this. Hit that like and subscribe button. Let me know how you're playing it, and I will see you for tomorrow's update. All right? Have a good one, guys.